You want a day trade, but you are stuck on the sidelines because there's a big number that you just can't hit. I'm talking about the $25,000 pattern day trader rule. That is a huge hindrance to a lot of people with small accounts, but the good news is that could be about to change big time. So the SEC is considering lowering the pattern day trader rule from $25,000 all the way down to just $2,000. And so if this goes through, that's a total game changer for anyone that's looking to grow a small account, for anyone that's looking to trade more actively, and anyone who's looking to finally have a shot at real financial freedom through the markets. I've never been a fan of people having to have $25,000 in their account just to learn to trade and to be able to get the data that they need to develop an edge in the market. And that could be changing. Today, what I'm going to do is I'm going to break down what's happening. We're going to talk about how this could potentially impact you, and then just some general account strategies for a $2,000 account and the biggest risks to watch out for. I'm going to answer some questions about this new change that might be happening, and we'll show you how to make the most of this new landscape. So let's dive in. Here's the deal. Right now, if you want to trade, day trade in the United States, this pattern day trader rule is a big hindrance for a lot of people. What this means is that you need at least $25,000 in your account to get margin and to be able, at least to get the margin that you need to be able to make more than 3 day trades in a rolling 5-day period. And so the way that people would get around this previously is they would use a cash account, and because of the T+1 settlement, basically you could trade your, like if you have a $2,000 account, you could trade your $2,000 account, the full amount of $2,000, every single day, and then that would reset. But let's say you get in a few trades and other stuff sets up later in the day. Well, you couldn't get in that with a cash account because you would eventually be limited on your trading. And so this $25,000 mark has been a huge barrier for a lot of people, and it's why a lot of traders are stuck with cash accounts, forced to wait for their funds to settle, or they just can't get started at all with actually learning an edge in the market. And so right now, what you need to know is that the SEC is reviewing a proposal to lower that threshold significantly all the way down to $2,000. And so what that means is that if you get in and out of a position in the same day, you can access that cash immediately. Instead of having to wait until the next day when the funds settle, through a margin account, you'll have access to that amount of money right away, and you won't have to worry about how many trades you can take in a day. You don't have to worry about being locked out of trades. So if this rule passes, you'll have access to margin and not be restricted to how many trades you take in a day with just $2,000, okay? No more $25,000 barrier for people. No more waiting for funds to clear. This is great news for those of you with small accounts. This is a big deal. It's a big deal for new traders, people that are trying to grow a small account, people that are trying to learn, because you don't need to save up $25,000 to get started if this passes. With $2,000 only, you will be able to begin trading actively and start compounding your results right away. So let's talk for a second about what these changes will actually mean for you, okay? First off, that means you'll have faster access to funds, okay? A lower barrier to entry. So previously, if you had $2,000, you would be able to trade $2,000 a day, and then you would have to wait. So with these new rules, you'll be able to access your full $2,000 as many times in a day as you want, which gives you more flexibility. So what that means is that as opportunities come up, whether it's a sudden market move, whether it's a news catalyst that comes out, a setup that you love happens to set up multiple times in a day. Like, we've all been in this situation, if you've ever had a small account, where you get in a trade and maybe the timing was wrong, but the idea was right, and you get stopped out, and then immediately that trade reverses. And if you would have had the funds to be able to get back in, you would have not had to worry about how many trades you had made in a day. You could have got back in and ridden that up to like a new high of day and made so much more than you lost on your stop loss. It stinks to lose money and then not be able to get back in a trade when it does work out. So with this rule, you'll be able to actually get right back in, which could come with some over trading risks that you should know about, you should be prepared for if you're not disciplined. We'll dive into more of that in just a minute. But the point is, you won't have to worry anymore about missing out just because your account is too small. The other thing this means is for a lot of people, you can have an accelerated learning curve. Here's the thing. The more you can trade, the faster you learn. I'm not talking about over trading, but what I mean is, what a lot of people do with smaller accounts is they get stopped out for the day in 1 or 2 trades. And then maybe they can't trade for a couple days if they're on a margin account, or they have to wait till the next day to try again. And it really slows down the learning curve. But what will happen here is you'll be able to actually lower the learning curve and increase the equity curve, because you won't have to just wait so long to collect data. The way that you're going to get better as a trader is with data. And if you can only trade a few times a day, it's going to take a long time to collect the data you need to develop an edge. But with this potential change, you'll be able to sharpen your edge even faster. All right. Let's talk now about how to take the advantage of this mindset. So if this passes, what can we do? All right. So let's talk strategy. Derek, what would you do if you were starting with $2,000? Let me tell you exactly how I would approach this landscape of trading, okay? The first is this. Risk management is always going to come first, okay? Here's a rule for you that I think is super important. No matter your account size, I never want to risk more than 1/3 of 1% of my account size in a single trade. I am an exponential trade size trader, so it's going to depend on risk for me, but my max risk is 1/3 of 1%. The reason that is because I never want to lose more than 1% of my account in a day, and that allows me 3 losses in a row before I would hit my max loss on a day. So if I've got a $2,000 account, I don't want to lose more than like $6 on a trade. I know that doesn't sound like very much, but if I'm thinking about the fact that I don't want to lose more than like $20 with a $2,000 account in a day, that's going to allow me multiple points of data. So when you have an account that size, what a lot of the temptation is going to be is to double your account, triple your account, because you're going to tend to want to take on more risk with a smaller account because it's not going to feel like that much money. But I just want to tell you that risk management has always got to come first, no matter your account size, because that kind of thinking towards trading is a recipe for disaster, because you're learning bad habits that when you then have a larger account, you're going to repeat those bad habits, and the losses will be exponential, and it will be so much worse for you. So build good habits with a small account first, so that when you have access to more funds, you're actually a good trader, not just a good gambler. And it's easier to do that with a small account when the stakes are low than to try and undo bad habits that you learned in your small account, okay? It's not sexy, but I will remind you that slow and steady growth is going to win the race no matter your account size. The other thing you're going to want to do is you're going to want to be selective on your trades. Let me give you 2 trades that are my favorite for a small account. The first of those is going to be the bread and butter breakout. Another one is going to be the 5-period SMA swing trade, or the 5 SMA rebound. I teach both of those trades on this channel for free. You can find those at the description in this video, and they can make you a lot of consistent money as you're learning. I think those are some of the easiest and best trading strategies for beginners. So the point, though, is you're going to want to start small with just a few setups, develop an edge, and then start adding to your playbook once you have an edge. Don't take every trade first, okay? Start with slow and steady growth and selective trades, which leads to this other temptation that you're going to have to be careful with, and that's going to be avoid over trading. If this passes and you can trade as many times as you want in a day, just because you can trade more doesn't mean you should. A lot of people, when they first get access to as many trades as they want in a day, there's a huge learning curve for people because they're taking hundreds of trades a day just to make a few bucks. And that's a really bad habit. Instead, focus on quality over quantity. Wait for your setup, execute your plan, and walk away when there's nothing happening, just like you would have to do with a large account. And then finally, the way you're going to take advantage of this if this passes is make sure that you're journaling everything. You cannot improve without data. Document every trade, why you took it, what worked, what didn't. Review that journal weekly, review it monthly to see what edge you have in the market. This is how you build real skill and not just luck. And this is the thing that being able to trade multiple times every single day is going to afford you that you perhaps didn't have before with a small account if this passes. If this passes, it's going to also take some mindset shifts. So just because the gates are open doesn't mean everyone's going to make it. If you have a small account and you are now able to trade as often as you want, this is going to take some mindset shifts. And here are the important ones that you should start building now. Number one, don't mistake access for skill. More trades also means more opportunities for you to make mistakes, especially if you are emotional or you are undisciplined. And so emotional discipline is going to be key. When you are not limited by the rules of just a few trades a week, it's easy to revenge trade or overtrade and lose more money. And so you are going to have a system and stick with it. Have rules. Don't break the rules just because you can get right back in another trade. That's a recipe to lose all your starting capital and to have to go to find another $2,000, all right? And then finally, remember the basics scale, all right? What's going to happen inevitably if this passes is a lot of people are going to start $2,000 account challenges. They're going to make videos about how you can double your account and triple your account overnight. And you might have success following some of those strategies. But here's the thing. I want to encourage you to not think small, okay? You're going to be really tempted to think small as a trader. And you're going to be really tempted to get into the hype of these challenges of doubling, tripling your account. You know, all you got to do is double your account 10 times and you can be a millionaire or whatever. But here's the thing. Being able to trade more with a smaller account is going to be really helpful for building habits and learning the basics more consistently and upping your learning curve. But I would encourage you to be realistic, okay? Be realistic. The goal, no matter your account size, should be this. Just be consistently profitable. Use the S&P as your benchmark. And if you're doing better than that, you're doing better than most fund managers. And so instead of falling for the trap of trying to turn $2,000 into $2 million in a certain amount of trades, just learn to make good money with the $2,000 for what the $2,000 is. And then use what you learn to scale. You can always add money later. After you have the skills, and if you add to your account after you have the skills, your equity curve is going to grow so much steadier and healthier than the habits that you're going to be tempted to follow gambling, trying to gamble $2,000 into millions, like a lot of people are going to claim as possible and try to tempt you to do. Remember, the goal with trading is a lifetime skill, not to get rich quick, all right? Now, I want to hear from you. Are you excited about this potential rule change? What's your biggest question concerning trading a small account? What strategies do you want to see covered in future videos? Drop your thoughts in the comments below. I want to make sure that the videos that I'm putting out there for you guys are meeting you where you are and are actually helpful for you and giving you the stuff that you need to know. The way I'm going to find that out is with your comments and your questions, all right? If you want more in-depth strategies, you want live trade reviews, you want a supportive trading community, you want trade ideas, check out my newsletter. There's a link in the description for that as well. We've got everything that you need to take your trading to the next level. Whether you're starting with $2,000 or scaling up from a small account, or you've got a very large account. If you found this video helpful, I want to encourage you to hit the like button, hit the subscribe button, share this video with someone that needs to hear this news, because there are big changes that are coming that are potentially going to affect small accounts. And let's make sure that when and if that day comes, you're ready to succeed. I'll see you guys in the next video.